Hi everyone, Stuart here again. Hope you can hear me loud and clear and see me okay. It's Thursday. It's the where are we? It's the 11th of December. Christmas draws ever closer. Those of you celebrating, we've been out again this morning. The footfall in where we've been this morning was quite busy. So retail, lots of people with bags here in London. So we'll see how all that pans out for the data later on into the new year. But anyway, as far as today's concerned, we have some key announcements earlier. We had a big miss for Australian jobs overnight, and we've had the Swiss National Bank leaving interest rates at the mighty 0%. The architects of negative interest rate policy not wanting to go back there. There's been some weakening in inflation in Switzerland over the last couple of months, but the central bank and the chairman in his statement sort of poo-pooed that, still saying they're worried about the potential upside to inflation, particularly goods inflation. Remember the poor Swiss got hammered with the 39% tariffs from Mr. Trump, President Trump. Initially, that's been negotiated down to 15% following some nice toys that the president got from I think it was the president, wasn't it? The Swiss president, and negotiated a reduction. So 15% for Swiss goods, high value, obviously watches, high impact. Obviously, the other big thing is obviously gold is a massive export for Switzerland. They hold them in their vaults as well. But anyway, the chart on the left here, or my left, your right, next to me here. Let me just make my head a wee bit smaller. You don't want to see all my great big head, do you? There we are. This is the Aussie Swiss on the daily chart. So we've been weak since lunchtime yesterday, basically under the 20 hour moving average. Big down candle there at 12 o'clock yesterday. And we've continued to loop lower, and we're at 53 itself. Big fat round number for Aussie Swiss. So a weakening Aussie dollar against the Swiss franc. Swiss franc's been ticking up. I think we took some long positions, didn't we, Swiss franc last night? But, so that's a combination of the news. Let's have a look at the calendar. We're here for the excuse me. The data that's about to drop is the is the weekly unemployment claims. Remember last week you had this massive surprise at 191,000, under 200,000, very, very significantly. It's a low since January 2024. If we look at the calendar, we're expecting 220 this week. The continuing claims also came down. So if we look at the calendar, we can see, there we are, if we just move that out, you can see what a big drop down it was last week. So is this an outlier? We're talking about coming back up here to 220 today. We'll see, but you can see, if we scroll across, we were last down here January the 18th, 2024, and then before that, you can see it's way all the way back here. So that's our 119. So it's a really probably outlier because of the shutdown, but we'll see what happens. But it was, as we said last week, it created that question mark over the weakness in the jobs market. Last night, obviously, was the Fed announcement. We'll talk more about that after the date has dropped in 10 minutes. So weekly claims, we'll see where we go after the date has dropped. Some more about from the Fed later on as well. So that's the Aussie Swiss down. Sorry, I didn't show you the Aussie jobs numbers. They were particularly weak. They were expecting to come in. Let's get rid of that. There we go. Let's get rid of that. This morning, employment change, an increase, unfortunately. A decline of 21,000. We were expecting an increase of 20,000. So what's caused that? We're in the middle of the summer in Australia. There's no real explanation for that. Unemployment did actually tick lower in Australia, 4.3%. So more or less around that full employment level. Remember, the Aussie dollar has been very, very strong, particularly against the US dollar and the yen and the euro as well. But as you can see, that was a bit of a surprise. But again, if we look at the seasonality of it, there's this monthly change, it was a bit of a surprise to that downside. We've been positive for most of the year, so it looks like last month was actually the outlier. The big positive one here, and along with the one we saw in May. So we might tick back up and see it's a bit of a surprise to the downside. So hence we saw that weakness in the Aussie against the Swiss as the Swiss data came in line with expectations. We had the rolling out negative interest rates from the press conference that Schnabel had earlier on this morning. So we'll see. We'll come back to this. We've got Canadian trade balance as well as the US trade balance and the jobs in 5 minutes time. So we'll come back to that in a minute. Let's have a quick run through the charts before we go. So there's that Aussie Swiss to the downside. I don't mind if you trade Aussie Swiss, to be honest, but it's like any asset. If it triggers on my system, I'll take the position. I don't care. Make money, whatever it is. It's just an asset. It's just a thing that's moving around. So Swiss franc against the dollar, big strength today. There's that 80 being breached yesterday, as we talked about, key pivot area as we've gone sideways. It's big down lev, and I can't remember if we triggered a short position in this earlier in the week, but I'm not sure I took it. But anyway, we're at 79.62, and if we look to the left here, all the way back here to November the 18th, before we were last down here. So the bid on the Swiss franc is continued over the last couple of days, and you can see the daily time frame. We've broken to the bottom of the channel we've been in, and we're now back under 80. Big down day yesterday. Looked like we were moving up earlier in the week. Turned around, weakness in the dollar again, bid on the Swiss franc, and that's only going in one direction. So on a daily time frame, the bottom of the Bollinger Band is now at 79.45. We're currently trading at 79.62. Big down candle yesterday, under 80. Many would have added shorts on that last night on that break of the .80, and that we followed through with more selling today, as you can see on the hourly chart. To the downside. So the trend is very much to the downside. Dollar yen 155. So we're back from 156 yesterday, and again a weak close into US trading yesterday. There's the Fed announcement at 7 o'clock. Lifted the dollar a wee bit, but then early hours we went back to 156. Couldn't hold that. As the Europeans woke up, and we started selling as soon as the European traders got to their desks this morning, and we're at 155.52, another key round number in play on the dollar yen today. But as you can see, that trend is in place. We had a cross on the stochastics again. We're under the 20 period moving average here on the Bollinger Bands. We've rallied up to it. That's resistance. So that is now resistance 155.89, and we're at 155.53. So 150 is the next area. But you can see there on those hourly candles, next downside is there. 155.30 is the next downside target for hourly traders, with stochastics moving lower and the bottom of the Bollinger Band moving down as well. So dollar under pressure again. Dollar CAD 137.92, 138 has been given up. Similar pattern to we've seen in the dollar yen. Rallied earlier this morning, and then Europeans have sold off dollar CAD into 137.92. So we're under 138. Big round number. I think that's sort of 20-hour sits. Yeah, so the 20-hour sits right on 138. To the downside. So double bottom this morning's low has taken us to 137.84. So that's next side down target. We start to move down as the cash market opens in the next hour. See what jobs does for the US dollar. So let's get the jobs out of the way, and I'll do a quick rehash of last night. That big, not a record, but doesn't happen very often. We got so much dissent on the FOMC vote. A very interesting press conference. I left you last night to watch the press conference. I watched all of it, and a very able display by Jay Powell's my take on it. Very professional, not being called out on the court case, the anticipation of a new chairman, how it's impacting his work. He wasn't getting dragged into that by some of the more partisan members of the right-wing press in the office there. but was called and questioned about why now, why did we cut rates now and not earlier, and what's changed since their last meeting, and explained all of that quite clearly. We'll come on to that in a minute. As I say, so dollar was weak yesterday following the Fed. Had a bit of a tick up in the overnight in the Asian session, low volumes, and we're back down again now. So where we see buys again at 138 for dollar CAD as an example here, we shall see as we move forward. Euro 117.20, so new highs or new recent highs here for euro dollar, and we were long last night on this one, and we're very much in the money. I think it's already hit target one. I think it was about 30 odd pips on that, but we are running. That's our entry from last night, 116.94, and we're certainly in the money, and we're moving high. If we just take this up to the daily time frame, let's check up in our audience. See the 4-hour cable. We're above that key 1710 level we got to on the 17th of October. So we're into this next congestion zone here from the beginning of October, this 5th to 6th. Congestion zone here at 1740 is the next upside target, still 20 pips away, but bid there, as you can see clearly on the 4-hour chart. Initial trade was that one yesterday. There you can see that one there at 10 o'clock yesterday morning, and then the daily time frame, you see we're back in the bid. We're pushing out of the range we'd been in for October and November, so we are pushing higher here. Big up day yesterday following the much anticipated Fed cut of rates by 25 basis points. Are they done? Well, it doesn't look like they're doing anything in January, that's for sure. But again, emphasize their data dependency. But we're long euro pound, and we're in the money, and 117.20 at the moment. Next stop, 117.40. 66.60. All the sixes for the Aussie. Strong day yesterday ahead of the jobs numbers. Obviously, a spike lower as the data. Let me show you the hourly chart when that came out. Unemployment came out at what time was it? 12, just after midnight at my time, 12:30 last night my time, and you can see the plunge we had. It's a minute chart, not the hour chart. That's quite long. Just bear with me a second. There's the earlier in the day. We rallied to 66.85 again, and then the midnight numbers came out around here, and we moved down, and then reaction was further lower. Then we've recovered on the weaker dollar in the European session, but like the others. So a low today took us to 66.26 as the Europeans were getting in to their desks. The traders were getting into their desks, and we've rallied and cut back and given back. Actually, be interesting to see how that's worked out on a daily time frame. So that's yesterday's range, and we're at the top end of it still. So we're still bid, although we're down on the day because of the surprise in the jobs numbers. See how on the Aussie, sterling 133.95. So we're just shy of 134. This was long. Was this long yesterday? I can't remember. There was some pound trades on there. I think we were along this one as well. Short pound Swiss. But so again, strong week for sterling. The low there on the 11th, 12, 13, 14. It's the hourly chart, you fool. So strong Asian again, European session strong. Big day yesterday, thanks to the Fed. And we're up again today, as we can see here. So again, exactly same pattern to the other dollar crosses. Weakness in the Asian session, supported by the 20-hour moving average here. Still in the upper half of the Bollinger Band from yesterday. All of yesterday from 6 o'clock here. And up we go. And we've just pushed to new highs from last night here as well, which is also positive. So up we go. Let's see what this data looks like. Oh, it's actually dropped, hasn't it? So let's have a look. Not much of a spike. So we went higher initially to 133, 134, and then we've come back down. So let's have a quick look at the data that's come across. It's coming a bit higher than expected. There it is. It's coming at 236. It's coming at 236,000. That's still good jobs numbers. Absolutely good jobs numbers. But interestingly, the trade balance It's coming better than expected. It's coming at negative 52.8 billion. Better than last month at 59 and much better than expected at 62.5. So imports slowing down. Are they tariff dependent? We shall see. But 236, it's back to, if we just, it probably hasn't updated the maybe I don't know, it hasn't. I don't. It's too quick, isn't it? Oh, come on. No, it's still got the 200 and there's that 291. So it was a bit of an outlier. So we've come in here 236. So we're back in that 230 plus. But again, as I've said many times, 220 is still a very good, relatively strong jobs market. Why does that look so odd? Why have I got that? Oh, it hasn't got the dates on. It's only got, there we are, 2023. Oh. Anyway, come in here, 236 is the actual date. Let me just get rid of that. There we are. Where have we gone? Thursday, 11th. 236. So it's back up. So it was a bit of an outlier, obviously, that last week. But last week, interestingly here, has only been revised by 1,000 to 192,000. Remember, we had that ADP positive reading, negative reading last week from the, and it was the 4th for the month. We don't get the official data. Remember, we've had no October or November non-farm payroll data. We do get that next Tuesday. I think it's actually scheduled, if I remember rightly, off the top of my head. We'll have a look at that later as well. So that's next week. We'll see Bank of England, Bank of Japan next week as well. So anyway, just look at today. I get rid of that. So the way we don't look at that. So where are we? So dollars had a little bit of a lift on that weaker unemployment data. So spike here for cable to 134. Clearly, it's at 134. Down we go, but we're still holding that upper half. So even on this 5-minute scalping approach, that's still looking quite positive. So again, remember, this is big news, significant news. So trading, no new trades 5 minutes before and 5 minutes after. But let's see where this candle completes, because that's still looking positive. So I'd be still buying that on that setup. Dollar yen on the 5 minutes, similar move. See, we moved up and now we moved back down. So it's being sold off. So that is continuing to unwind. And the euro 117.18, similar, interesting spike up and then down, but again, still holding the 5 minute upper half of the Bollinger Band there. It has run out of steam a wee bit, but we were still above this level here at the moment. See that top level there we had here at 12.30 and 12.25. Sorry, 11.30, 12.25, 13.15, and there's the data at 13.30, and we're now back above it. So it's still suggesting perhaps more upside. And looking to buy that rather than sell it. Some more dollar weakness potentially. Let's have a look at some of the other assets. Gold, which we were long last night. We're out the money on gold. Our entry was all the way up there at 422.785. We got filled and we're out the money, but we're coming back a wee bit on the back of that data as well. So the low today for intraday gold traders was at 4204 this morning, and again just ahead of the data. 4205 is our low of the day, but very much sideways action. My end of day system triggered a long position. I think it was on the main system last night. I should check, shouldn't I? It's end of day stuff, so I don't get too uptight about it. Last night I've had two positive up days, but it's nothing significant, to be honest. We're out of the money at the moment. Our stop loss is 4191 on an end of day basis. That's my stop loss down there at the bottom of this little range we've had. So we'll see how we go into Friday. For gold, we're still long that. But again, not a great deal of intraday action on there. Silver, we talked yesterday about silver going through 60 and 61. We're through 62 this morning, so new all-time highs again for the silver market today. Very, very robust week. Very, very strong run from the summer for silver, as you can see there, down here at $32, $35, $37, and we're up here at now all new record highs again for silver, continuing to outperform other metals. So silver very well bid. Crypto, we had that rally to 92,000 for Billy Bitcoin. We're back, couldn't hold it. We're back down again today. On Tuesday, we went as high as that 95 zone, 94.5. It looked like we were starting to move up. Gave up the key 92 yesterday. We were trading under it, and we closed it. We actually closed above it, but another significant, unfortunately, down day today for crypto. So 92 hasn't held. Whoops. I was talking bad about crypto. The screen dropped down. And we're under 90,000 as I speak at the moment. You see that's the daily rolling bottom there on the 20-day moving average on the midline of the Bollinger Band. That's quite a negative setup as well. So see the upper Bollinger Band is curling down, the lower is curling up. So maybe some compression. And when we see compression in the Bollinger Bands, we have expansion like there that day there. That day then it moved down again, but that was just featured something to come. So watch that one as well. But weakness to the downside, 80,500. Remember that intraday low we had in November, and then the more significant 75,000 support zone to the downside. Two downside targets for crypto. We need to break and hold 92 and then 95,000 to the upside, and then the psychological 100,000 as well. So again, not a lot of trending going on. Sideways action, we may see some movement over the weekend again. Indices were relatively positive last night. We were up 0.67 of 1% on the S&P. The Dow was up a whole fat 1% as we saw yesterday, didn't we? We saw the Dow was outperforming, and Nasdaq was up 0.33 of 1%. This morning, S&P 6860. We closed at 6886, so we're down 6 points from the cash close here on the derivative market. Again, sort of sideways action, but we are sort of in the upper half of this Bollinger Band still. So sideways, small candles on these daily time frames. Not a lot of action at the moment. Remember, December can be quite a significantly positive month normally for stock markets. Very, very quiet. First couple of weeks at the moment. So see if that turns on its head. Remember 2018, the last big tariff time with Trump. We had quite a negative December, so we may be booking the trend again this year. But we shall see as we go forward. So sideways, positive day for the Dow yesterday. Nice big positive candle yesterday on the Dow. We longed it now? No, I think it looked like we might be taking long position yesterday, didn't we? Or a short position, I think it was, potentially yesterday on yesterday's close, but it didn't actually trigger properly. So I don't know what those must be intraday lines. I don't need to get some of these lines because the system gets a bit squiffy. So we're still shy of all-time highs, 48,390, 48,400, but a good strong day yesterday. Big engulfing candle. See how that has taken out 1, 2, 3, 4 last 4 days positively. The industrial stocks doing well. Obviously, a lot of it's on the back of that. The hostile bids kicking around for Warner Brothers from Paramount. The Netflix deal was done. Netflix lost a lot of percentages, came back a bit yesterday. So that's still a bit messy, the media landscape in the US. So strong day for Dow, less so for the other two indexes. And the NASDAQ 100 that we show here is the NSDQ, the 100, not the wider range. This is the NASDAQ 100, a down day today from a positive up day yesterday at the moment. So, but we've recovered from our lows. Actually, quite a significant move lower. Let's call that. So I haven't really been following the tech news today, but that was quite a spike there. When was that? The middle of the Asian session. Okay, I don't want to get too excited about it, I don't think. But that was quite a ramp up following, and then it sold it all off, didn't it? This is Powell's press conference thereafter, knowing all the way now, but we've given most of that. So we're more or less back to where we were ahead of the Fed. If we were here before the announcement, sort of back to where we were, I suppose. So as you were, but a bit of volatility. Some intraday characters playing with the market potentially, or trying to make some moves. So that's quite a significant move. Yes, they may want to watch that today. If you're trading a Nasdaq today, that's quite a range we had in the last few sessions. So as if by magic, there we are to the 61.8 fib, and there's a 50. So we're in that key range at the moment. I love Fibonacci. It just does what it says on the tin. It's not magic. It just is what it is. I hate that phrase. It is what it is. But yeah. So yeah, Nasdaq still bid on an end of day basis, and a bit like we've seen with the other US stock markets, running out of steam here in this first few weeks of December. It's a bit of a weak rally. That's like a rounding top forming. So yeah, there could be some volatility into the end of the year still. That's cross short there on that stochastic cross, but we're right smack bang in the middle of the upper half of the Bollinger Band. So yeah, no directional technical on that particular mean reverting strategy. So Nasdaq remains somewhat bid. Guys, if there's any particular asset or anything else anybody wants to add or comment on, please let me know. We'll have a look at it with you. So check the chat box. No, nothing in there. Okay, so weekly claims have come in weaker than expected, or hotter than expected. The continuing claims also have ticked up. So 236,000 the weekly claims came in this week, up from that 191,000, which is now being revised to 192,000 from last week. So that remains very strong. That's not going to go away. So we need to move that again out of the way. And that's the main news of the day. Earlier, we did have the other thing I've skipped over was two speeches from Governor Bailey from the Bank of England. Nothing really market moving in there. One was a pre-recorded speech earlier this morning, and then another one about 10 minutes later. He was testifying to the COVID committee here in the UK, where the government has been found to be chaotic and out of control. Obviously, he had his financial input say, so it hasn't been market moving comments from Bailey, just saying that households and companies look relatively okay, relatively robust, even though many of the sort of typical, some of the data, you stop people in the street and ask them about how they're feeling. It's all very, very negative still here in the UK. Obviously, the weather in the UK doesn't help in the middle of winter, but yeah, people are still feeling the pinch, even though energy prices have come down. Some people's energy bills are still going up. It's the crazy setup here in the UK. But, anyway, more of that for another day. Trade balance better than expected as well out the US. 52.8 billion was expected. Negative 52.8 billion was expected to be 62.5 billion. So again, something the president could get his teeth into later on. No doubt he will, given his expectations. So, as I say, the other main news was the Aussie jobs missing quite significantly, and no change from the Swiss National Bank. But there was comments about the potential risk of inflation going forward into next year. Right, my just comments about last night and the Fed. Watching Powell's press conferences. He talked about obviously the impact of tariffs and goods inflation starting to tick back up. We've seen not disinflation in goods before this, and we've seen services inflation reducing quite significantly, which is why the inflation number has come down, because we did have that sticky services inflation, but that seems to have sort of broken a wee bit at the moment. So what he's saying is, it's very difficult to tell the impact of the tariff inflation. There will be an impact. It will be a one-off. That is what they're saying. It's a one-off realignment of prices. And really, he's talking about a 9-month lag from that first April announcement. There were obviously, we've seen the tariffs being ameliorated around different countries. Are we going to see any more tariffs? Probably doesn't look like it. Is the worst of the tariffs in? Probably. Too early to tell with this president, obviously, but it looks like it, doesn't it? And so the impact, should be into the data by the middle of the first quarter, certainly by the end of the first quarter, is what Powell was saying yesterday as he comes towards the end of his tenure. So it could be. Trump was right after all, but we shall see how it all pans out. He's in it. Trump is out touring has been out touring the US, trying to sell his cost of living situation for the average American, but many are not buying it. Many are obviously very well in line with him, but he does get out there and communicate with his base very, very well. Got to give him that. That's Thursday, the 11th of December. If there's any questions, if you're not a member of the gang, of the prop trade gang, do come and join us. We're very open. It's very straightforward. Pick your challenges, whether it's a 1-step, a 2-step, instant funding. There's a whole plethora of ways of trading now. We've got Trade Locker and we've got C Trader now. A lot of you have been asking for C Trader as a platform. So do come and join us. Let's have a look at that's what I'm talking about. Let's have a look at the website while we're here. Do come and join us. This is my demo account. That's the 2 demo accounts I've got. There's lots of things here on the website. So the calendar, the platforms. So if you want to use C Trader, and I'll say a lot of you have, lots of different ways of trading in different apps. Obviously referrals, affiliate programs, and we can get paid very, very quickly. There's a payout. It's nothing for me because I've got a demo account. But different types of challenges. Let's have a look at the challenges available. All sorts. So I say 1-step, 2-step, the standard approaches from offered by most default prop companies. And now we've got the PayFlex and we've got instant funding, different platforms. I've said, balance. It's up to you how big you want to do it. Rewards start from 80%, go up to 90%, and understand. If you don't understand, ask. We really, really pride ourselves on the speed and efficiency and open transparency and communications we get here on our Discord group. So do join our Discord group. The main chat is this general chat box. And I stick stuff in there as well. I sort of do things up, but the team are there all the time, virtually 24 hours a day now, and instant responses. If it's not clear, if you don't want to expend things publicly here, just on Discord, because you never know who's watching. Obviously open a ticket and you get sorted out quite quickly. There you go. First payout available 14 calendar days after the first trade in the funded account. Can't get asked much more clearer than that, can you? I hope that answered Ronnie's questions. No, I requested payout, yes, but how much time it take to process? Apologies, no issues. It take about 3 business days to process. Okay, usually much quicker than that. And then if you look at our payouts, not everybody posts here, but standard. I know Dharmic's had about 7 or 8 payouts. I don't know if you hear Dharmic, but I know you've had lots and lots of payouts. But steady away. All of these might not seem huge numbers. Here our Guff, he's so pleased with himself. He got $100 each time here. But they build up. They build up over time. Don't rush this business, because once you've got it, you've got it. The markets haven't changed. There's a lot more technology involved these days. There's a lot more robots and algos and all the rest of it in different ways. But there's, if you understand yourself and understand your risk profile, nobody understands yourself better than you or your mother, typically. But if you can manage your risk, if you can accept losing trades, which most people cannot, you can be a success in this business. That's the key. And that's certainly what I found, and many thousands of traders I spoke to over the years would agree with me as well. But there we are. Cheatham, another nearly $600. His second payment, nice and smooth. I'm truly grateful. There we go. That was yesterday. Or not yesterday, day before yesterday. So come and join us. Give it a go. We're here to help. Costs nothing. Take care. See you all again tomorrow. Tomorrow we'll be doing a wrap for the week. And it's also, what's tomorrow? Is it, I should know, shouldn't I? Tuesday, Thursday, Friday is, it's, I know I'm on at 1:15 again tomorrow for, I thought it was something. It just says building permits here. Paulson speaking. Perhaps I scheduled it before the data's been changed. Anyway, I'll see you this time tomorrow. We'll do a weekly wrap. Okay, take care, everyone. See you soon. Be good. And if you can't be good, as I say, be careful. All right, take care. See you soon. Bye-bye.